Today we're going to cover S corporations, and we're going to look at the pros and the cons, as well as I will show you how tax treatment can be different if you are filing as a sole proprietor or an LLC non-S corp and a LLC elected S corp. Now, corporations, regular C corporations, can also be an S corporation, and it just requires the election to file. So we're going to cover the pros and cons. I'm going to go over the Form 2553, which is the election, and I'm also going to show you that comparison. The first question, of course, is what is an S corporation? So an S corporation really is a tax treatment. It's not a special entity like an LLC or a regular corporation. This is just how the IRS will tax you, where a regular corporation, they get taxed from their net income, and right now that's at around 21%. An LLC, if they do not do the S corp election, they get taxed just the same way as a sole proprietor. So an S corp allows a business to forego the corporation tax, and the net income will pass through to their personal tax returns by way of the K-1. There are qualifications before you can do the S corp. So one of the biggest things is that you actually already need to be incorporated within the United States. Whether you are incorporated as a regular C corporation or as an LLC, that has to be done in the United States, usually within the state that you are in. A difference between an S corporation and a C corporation is that only U.S. citizens and residents, and they have to be individuals, can actually be shareholders. So you cannot have any foreign shareholders that do not live within the United States. Also, they have limitations on how many shareholders there can be within a S corporation, while a regular C corporation or even an LLC can have multiple shareholders or members. And also there is the fact that you only have one class of stock. Pretty much when you decide to do the S corporation, if you're doing it on your own, you're 100%. All of that, those shares are yours. While if you have a partner possibly, then it could be 50-50 or however many, the least amount being 1%. We're going to start with some of the pros of doing the S corp election. And the biggest one, of course, that people do this is for the potential tax savings. Right now, if you are a LLC or a sole proprietor, you are filing the Schedule C with your 1040, which is the income and expenses of your business, and you are subject to self-employment taxes on the net income, as well as income tax on your taxable income. Also, another big thing is that as an S corp, those payroll taxes that you pay, whether for the employee as well as the employer, which you will be both, those become business deductions, just like your wages will be a business deduction. So your net income will likely be a lot lower for the S corp, plus that income is not subjected to the self-employment tax. Another pro is a limited liability protection. Now, if you're already an LLC, you do have that as well, but remember that is limited liability. So you still want to make sure that you are properly insured. And a big thing is that you really have to be so very careful not to commingle your personal and your business expenses. If you are going to be paying personal expenses, you'll either need to increase your wages, or you will do a distribution and transfer that amount and pay that personal expense through your personal bank account. This is a case where if you are commingling, the IRS, as well as if you're ever sued by a vendor, can pretty much say that you're not operating as a business owner. You are commingling, and I don't know what is business and what is personal, and you can lose that protection. Another possibility of a pro is if you want to get some outside funding. A business may be looked on more favorably by a bank, or you can even possibly take on a shareholder that can assist you with more funding so that you can continue to build the business. Now, something like this, you definitely want to speak with your tax preparer because you want to make sure it's done right. And again, remember, any shareholders have to be either U.S. citizens or U.S. residents. This one I just stuck in myself is that there is a lower probability of being audited by the IRS. If you are acting properly as an S-corp, you are taking reasonable wages, you will likely be less audited than a Schedule C filer. Because a big reason is that you are required to keep better records. You need to have them. You need to have financial statements like a profit and loss and a balance sheet. And that's where you definitely will want to work with a professional bookkeeper, work with the CPA, and work with a tax professional like an enrolled agent, where as a team we can assist you with that. Okay, so now we have to get into some of the cons. And a big thing of this is high costs and the administrative responsibilities that you will have. So you're definitely going to have more paperwork that you're going to have to do. You're going to have to file annual reports. A lot of times this is already a requirement when you're an LLC. You need to maintain records. You may need to have minutes of a shareholder meetings. Now, pretty much if you are the only shareholder, you can just write notes of what you are planning to do for the next year, if there's any changes that you're looking at. And one of the things that you can consider is that in the beginning of the year, you might want to look ahead. It's like, what do I want to see for this upcoming year? Are you going to take on any new shareholders? You might want to write that down. Are you looking to expand? Are you looking to make changes in whether you're going to continue the SCorp? So all of these things, so if nothing new is happening, you don't really have to worry about it. But if there's something that you are looking at doing, you would want to consider that. You also have to realize that you are going to need to not do it yourself. There are too many people that have businesses that they may have been doing their own tax returns when they were Schedule C. But if you're going to take this leap, then you have to be able to pay for those higher costs. If you feel that you are going to try to cut costs as much as possible and you're going to try to cut costs in areas like this, it can actually come out and hurt you in the long run. So usually a suggestion is that you budget about 3 to 5% of your gross income towards bookkeeping, tax preparation, and payroll fees. It doesn't mean that you necessarily have to use it, especially if you have a very high amount of gross receipts. But if you are looking and you have a $100,000 business that the income is coming in and you're not willing to spend between 3 and 5% of that for these tasks, then you really shouldn't consider the S-corp. That has to be part of the equation. So there are some restrictions as well as some requirements. So pretty much as a restriction, you can't have shareholders that would fit into the non-resident aliens. Any corporations and trusts, they can't be shareholders. And also if you are looking to have investors and you want to attract outside financing, it's possible that being an S-corp could be a disadvantage. In that case, you might look to do a regular corporation instead of an S-corp. And also, if you are actively working in your business and you are pet groomers that have pet grooming businesses, and 99% of you are going to be primarily the worker as well as the employer, what you would want to do is to make sure that you're paying yourself a reasonable wage. Because if the IRS sees that you are paying yourself a minimal amount of salary, but you are taking large distributions, they can come back and actually reclassify that. They can reclassify the distributions that you are taking, and all of a sudden you're going to find that you're going to owe payroll taxes. So usually what I suggest is look in Google and put in what is the average wage for a full-time groomer within your state, and use that as at least a base. Of course, you're going to be having other tasks as well, including management and stuff like that. So if you are a business, for example, and you are taking in like $100,000 in gross receipts, and you are the only employee, and you have, after your other expenses, before you include your salary of like $50,000, you don't want to pay yourself like $20,000 and then take $30,000 distributions. That would be a real red flag. So my suggestion is that you would want to at least try to pay yourself that minimum, or at least 1/3 if you have a lower income for a particular year. So again, I did put this again, and the limitations, which is the same as the restrictions about how many people that you can have. And another limitation is if you are a 2%, if you are a 2% or higher shareholder, which most of you, you'll either be 100% shareholder, or if you have a partner, probably 50% shareholder. So if you are getting health insurance for you and for your family, if there's no other health insurance available for other family members, it would be part of your gross wages. It would not be deducted as a health care benefit. But one of the issues is that as long as your health insurance is less than what you are paying yourself in wages or your salary, then you will pretty much be able to deduct your health insurance as self-employed health insurance. But if it's a case where you have like a $10,000 salary and $20,000 in health insurance premiums, you're only going to be able to take up to $10,000 of that. So before we get into showing you a comparison in how you can save taxes or the form to file a SCorp election, I just wanted to do this little summary again, just going of how a SCorp can offer tax savings. It can provide you some limited liability production, and it's also more of a formal structure for financing. But again, it does come with increased paperwork, restrictions on ownership, and limitations on shareholders. So, what are your next steps? Hopefully that gave you a little bit of an idea. Now the question is, when should you be considering an SCorp election? So some of the things that I like to put through is, when did you start your business? Are you brand new to your business? Give it a full calendar year before you do the SCorp election, and don't let anybody talk you into an SCorp if you are not yet ready. A number of times I have seen where someone is getting help with an LLC, and then they're talked into an SCorp right away without understanding the rules behind it. And then they just get into a loop where it's really not helping them, and they're stressed because they don't have the money to really operate yet as an SCorp. Another criteria I like to set is your net income from your current business showing about $50,000 in net income? And you want to also remember that you have to consider the draws that you are taking. So you may see that, okay, I have this amount in expenses, but you don't consider that all of your net income comprises both what you have left as profit as well as what you've taken as a draw. And that is what's subject to that 15.3% for the self-employment tax and income tax. So if you find yourself that you're like drawing, $750 to $1,000 a week, that's when you might want to consider doing an SCorp, because you are paying a lot higher taxes than if you were an SCorp or if you just were an employee in another grooming shop. Another thing that you want to consider is, are you finding yourself in a vicious tax loop where you are not finding that you're able to make the estimated tax payments on time, and that once April 15th comes, you owe a large amount and you're not able to pay it all? So what I have seen is some clients that have, before they transferred over, they are having to go on a installment agreement because the taxes keep building up and building up. And the thing is that after a while, the IRS will say no, and they will want those taxes, and you can get really hit with penalties and interest besides what you owe in taxes. And also, very important, you need to see your business as a business. It can't be a hobby. You don't do a S Corp for a hobby. So if you are not able to take care of the responsibilities of an S Corp, you don't want to do that. But if you have been running your business and the only thing that you are finding an issue is pretty much getting on top of the taxes, an S Corp can be a good idea. So if you are already using a bookkeeper, if you are keeping a good record of your business expenses, you're keeping your income, you are keeping your business and personal expenses totally separate, then an S Corp might be a good idea for you. So we're going to show you how an S Corp can save you in taxes. So what I wanted to do was I wanted to show you how you could possibly save on taxes by doing an S Corp. And I am going to show you it using 2022, where if you were a sole proprietor or an LLC non S Corp, and then in 2023 if you did the S Corp. And of course each year there's going to be a little bit of differences within the standard deduction and such. And I'm also taking some assumptions that for the for the taxpayer, they're filing single, and the only income that they have is business income. So for 2022, and this is just how my software has it, we have net income from their Schedule C of $50,000. They get an adjustment of $7,065, as unlike a W-2 employee, there is nothing withheld from their paychecks. Like when you have a regular paycheck, you know that you have taxes withheld. So that would have you as an adjusted gross income of 42,935. Then you would have the standard deduction, which in 2022 was 12,950. It went up for 2023 due to the issues that we had with the spike in inflation worries. So this is definitely a standoff because it probably would not have gone up as high otherwise. So kind of think that just as a variable. You would get a deduction for qualified business income, which is 20% of this amount. So this is your taxable income, and then this is your regular income tax. Now that does not include the self-employment tax. So this amount over here of the other taxes is actually the self-employment taxes based on this amount. It's 15.3% of that. So as you can see, by having a Schedule C business, you are paying a lot in taxes. Pretty much 1/3 of your total income went towards you having to pay this amount. And if you don't make that payment up, then you are looking at penalties. And you also want to consider that you would need to make estimated tax payments of 25% of this each quarter. So you're looking at about $4,100 you would need to do in estimated taxes. Because remember again, this is your net income, but it's very possible you had been taking out drawers for your business, but that is also subject to this tax. So here we have they are pretty much stating that you did not pay this on time or you didn't do the estimated tax payment, so this is the amount that you could owe. So if you look at the marginal tax rate, you're at 12%, but your effective tax rate is 77.1%. So that's pretty high. So this next column would be for like 2023. If I could have done it where you have the same year for both, I would have, but that I don't have that capability within my software program. But let's say 2023, you decide, you know what, I'm going to do the SCorp. I made that $50,000. So what you would do is you would pretty much figure that you would do a $40,000 wages for the year. And then figure about you'll have 5,000 additional expenses for the S corp. So that would bring your S corp net income to 5,000. So you're having a total income of 45,000. So it's a little bit less here, but you're going to see how that definitely works out. Your adjusted gross income is the same amount. The standard deduction, again, this did go up a little bit, so you have that. And you'll still get 20% of that 5,000 net business income from the S corp. So this leaves you with a taxable income of 30,150. So you're looking at this and go, well, I have more taxable income. That is true. So this would be your income tax rate. However, one of the things I definitely suggest to my clients that do this is to withhold usually at least 10% if they can, because that withholding for federal taxes will cover the income for the W-2 earnings as well as the net income from the S corp. So if you withhold that 4,000, so pretty much right over here you see tax due or overpaid tax, you are actually going to get a refund of $599 based on these figures. So you can see where as you're getting to have to pay your taxes by April 15th, if you didn't do estimated taxes, you're not going to owe. Look at that difference. So you're actually going to be getting a refund back. And here we have your marginal tax rate is 12 and your effective tax rate is actually only 11.3%. So I don't know about you, but I would much prefer not owing this amount. You saw the comparison and you see that you do fit into the criteria that this would be beneficial for you. So before we get started, we just went over the comparison and you see yourself in the situation and you want to take advantage of this and you want to go forward. So the question that you need to ask is, are you already an LLC or a corporation? And has that been effective as of the first of the year? If so, that's the first thing that you have set up right. The next thing is you want to make sure that you have a EIN for your LLC. So if you just did the LLC for yourself, make sure you have gotten an EIN for the LLC. If you don't, it can cause issues later on if you're using the same EIN as you have been for your sole proprietorship. The next thing is to file the Form 2553. And I'm going to show you what that particular form looks like and areas where you will need to sign it. And then that would be faxed to the IRS. And in order to be an S corp effective January 1st of 2024 or whenever you are watching this in the future, by the 1st, you have to make sure you do this election by the 15th of March of that year. Once you do that election, the first thing you want to do is you want to put yourself on payroll, because even if for any reason the IRS comes back and either disallows it or you never get the letter from the IRS, you want to act like the S Corp. And the biggest thing that you can do to act as an S Corp is by putting yourself on payroll and paying yourself a reasonable salary. You also want to work with a tax professional and a bookkeeper or a CPA to help you going forward, and definitely keep your business separate from your personal expenses. So we're going to take a look at this form a little bit in more detail. What I want to do is I want to show you Form 2553. This is how you do an election to be an S Corp. A lot of times I've had clients that stated they became an LLC and they weren't sure whether or not they were an S Corp. And one of the biggest things to do the S Corp election is that it really is a very active role. That means you don't just do an LLC and become an S Corp right away, immediate, automatically. You actually have to fill this form. Pretty much, and this is something that I definitely help my clients with. And once I have that filled out, I actually will send this to the IRS via fax, depending on where they are located in the United States. And then usually what happens is they will get a letter from the IRS approving their effective date. Now, this letter can take sometimes half a year. Sometimes you may not even get it. But the idea is that you fill out this form and you sign it and you save a copy for your own records. So this way, if for some reason you haven't heard back from the IRS by the time you file for the tax year, you have this information that you can provide to your tax preparer and they can start your tax return, and if needed, they can actually do a late filing election. Because as long as you're acting like an S Corp, you can usually be approved to be a S Corp for that particular year. So pretty much you're only going to be dealing really with the first two pages. The place to get this information is the EIN letter that you received when you got the LLC or the corporation, so that you have this where you have your information next to you and you can fill this out here, or you can provide that to your tax preparer. If you need assistance in just filling this out, I can assist you with that as well. Pretty much you're going to put in the information. You'll have that EIN. Like I mentioned, you have to have a EIN for that LLC. So on that letter that you get from the IRS when you do apply for an EIN for the LLC, that's going to have all that information. The date incorporated usually means the date that you became an LLC within your state. And then pretty much the state of incorporation. So they consider in this regards an LLC as being a corporate body, but that is only in their lingo. But then you would put that here. So usually it's your resident state, but every once in a while you may have used a LLC in a different state that has a little bit more lax reporting issues. If there's no change, you don't have to worry about that. The election, you usually want it to be effective as of the beginning of the year, tax year, and you have up to 75 days from that. So let's say you decided you wanted to be an S Corp for 2024. You would want to have this done and into the IRS no later than March 15th of 2024. And then you can backdate it to January 1st of 2024. As an S Corp, you would be a calendar year. So your year ends on December 31st of 2024 if for this particular year. You'll put your name and your title. Pretty much it'll be your name and usually officer. You can, if you are the only shareholder or a member of the LLC, it'll be you, and you can actually, pretty much put president. That would be fine. And then you put your phone number. This one you don't need to fill out unless you're going to be doing a late S Corp election. And that means, of course, that you acting as an S Corp for the prior year. You've been on payroll, and you'd be able. It could be an issue where you can put the form was mailed when you mailed it, and then you would sign here and you would date here again the title and date there, and then over here you would put your the shareholder, and if you have another member of the LLC, you would put that person here, and you put your name and your personal address, your home address. You would sign, you would date, and then the number of shares is either 100% if it's just you, or if it's you and a partner, it can be 50-50, or however you do it. Date acquired, I would put the same date as the effective date, so you would put like 1/1/24. You would put your social security number. Don't put an EIN number. The only time that sometimes you could do an EIN number is if an estate or a trust, because those are the only other entities that can be shareholders. Remember, a corporation cannot be, a partnership cannot be. So if there's, because that breaks it down further. So it has to be pretty much an individual, and then you would put the shareholders tax ID. So technically you have to sign here and then you sign over here. You don't really need to worry about pages 3 or 4. If you feel that, you say that I'm an S corp, and I'm going to say, well, did you fill out this form, when did you sign it, and can you send it? And if they don't recognize it, that means they are not. Possibly they were working with somebody that helped them with the LLC and talked about the possibilities without really explaining what it requires to be an S corp, because like I said, it's a lot more than just starting the S Corp. There are a lot of requirements and the restrictions, and you want to make sure that you get that right. So I hope that little brief overview helped you, and let's go on. So I hope that this video has helped you, and if it has, please like it. Share this video with somebody that might be thinking about doing an S Corp or would like more information. Any comments are greatly appreciated, whether on this video or suggestions for future videos. And subscribe to this channel so that when new videos are released each week, you will get notification. Don't forget to do your beneficial owner information reporting for your LLC or corporation. Remember that if you did the LLC before the 1st of January 2024, you actually have through the end of the year. If you set up in 2024, that means from 1/1/2024 going forward, you have 90 days from when the state has you set up as an LLC. And then starting next year, you'll only have 30 days. And if you should make any changes to your LLC, you're adding or removing members, you need to make those changes within 30 days. I will again attach this particular video tutorial so that you can actually do this on your own. There's no need to really hire somebody to pay for this, especially if there's only you or you and another partner. I would only suggest having somebody help you if you have a LLC with a lot of members. Thank you, and I'll talk to you next week.